And just remember, there is significant loss in trading the markets. Okay, where do we begin? What I want to start with first and foremost tonight is a couple new additions that we put on the radar screen. These are some of the tools that I use to make money in the market. And there's a lot of different ways that we can make money in this market. We have so many different tools for different reasons, and there's different tools for different purposes. Some of you are familiar with the last conditional change indicator, and that is something I wrote about in a book, Candlestick and Pivot Point Trading Triggers, page 264. And not only is it a phenomenal, I think some of you have discovered its value in not to where after we got a buy signal where to place your stop, but also it helps to identify better breakdowns and qualify sell signals. To the point where I do want to talk about this quickly, and I'm going to share with you a kind of a trading strategy or an indicator that's an automated system. This is just based on the E-mini S&Ps, basically just today's trade action. We'll go through some of the signals and the setups. This is a last conditional change. That's a PPS indicator. It generates a short position. You can see short 4 contracts. It has a stagnant profit target. If it's a red line, it's a loser. If it's a blue line, it's a winner. This is actually 2 trades that we did today in our live trading room, a short for a quick profit, and then a long right before the close, which was, again, a really nice setup. I mean, given the fact this is all the market gave us today, you know, on an interesting kind of market environment. And when I say interesting market environment, I mean we are subnormalized ranges in the marketplace. So what I point out about the last conditional change, and I'll get to one of the tools that we could look at, a defining tool Wells Wilder developed called average true range. So when I just had mentioned in this unusual environment about low volatility, I'm not talking about the low volatility of the VIX. I'm talking about low volatility in daily ranges that we see, and that's we will present some things and some ideas that has been going on, and some of what I believe is a part of why maybe we're not seeing as much activity in a lot of options. Bid and ask are widening. Even in Apple, some of the more pronounced markets that were very high or very liquid option markets are now you're starting to see wider bid and asks and implied volatility. Not because the stocks are up, it's because, you know, there's just maybe not as much demand in them because traders are using other vehicles perhaps. And that's a theory that I'll discuss with you tonight. It's based on this thing. You can see the tab already. It's the VXX. But anyway, I just let the cat out of the bag, the volatility ETN. But what I wanted to share with you is this very simple concept about the last conditional change. Many of you, you know, we have this tool built into the TradeStation person's lifetime indicator. The gray is a resistance. So resistance, if you get a short position, the resistance is where X is a symbiology for a stop loss, okay, or a stop. Whether it's remember, buy stops are always above the market, sell stops are below the market. So if you go short the market, you have a short entry, your stop would go above the gray line. And if you get a buy signal and the market breaks out above, it's hard to see, but it's right here, the little gray line. Maybe I could zoom it up a little bit better. And this is the trade that fired off this afternoon that I gave into the trading community in the trading room. That gray line in the sand. The market bounced off the gray line in the sand. This person's histogram, and this is a very specialized tool that I'm very fond of versus looking at, many of you have this with the person's package. This is the volume indicator. This volume indicator is, in my mind, much accurate in detecting not just the divergences of volume patterns, but it gives a lot better of a reading due to the very nature that it is comprised of kind of like the MACD histogram as well as moving averages, but it's based on volume. So we can get a, as the market makes newer lows, we can kind of see that the volume indicator is crossing over, and we can see confirmation Now this is an interesting concept setup that I've developed for myself. This is a 5-minute chart with a 15 underneath. And so basically I can kind of get a gauge and say, gee, is the 15-minute, what's happening in this time frame of the 5-minute? Is the 15 in a solid downtrend, or is it breaking out, making a higher high? The real essence of a buy signal here, folks, was the fact that the market had a last conditional change, that little gray line, and made a breakout and then entered a long position. That was the long position that we gave in the trading room this today. And as I said, you could scale out, or at the very least, you better be flat ahead of the close. And so that was the E-mini S&Ps. The way this thing fires off is, you know, using a last conditional change system, or at least, which is, while I'm at the subject matter, we have the last conditional change because when I enter into a long position, I have a better idea of, instead of having a stop way down here, if the market truly is bullish, the last conditional change should act as support. We should see a move up. And not only does it act to where I put my stops, but it also acts to help quantify a sell signal. So if we get a decent sell signal in the market, right, it's because not only did it break its trend, but it broke a last conditional change. So if you look over here, the white line in the sand, I always call it the white line in the sand because literally it's the white line in the sand. This was a support factor. That's the last conditional change. And as you can see, we generated a PPS sell signal, and the market closed underneath the last conditional change, thus generating a higher quality sell signal with a defined profit target. Notice that the last conditional change stop loss was not violated. Close, but no cigar. So whatever we've tapped into in this algorithmic trading world, it's been doing it's a dynamic force, and this is stuff that I wrote well over a decade ago. So just to kind of prove a point that even though you can get quality sell signals or quality buy signals, not red, remember, that is a little loser. In fact, just to share a point, I mean, this is just trading over the last 2 days, taking just simple little day trades. Again, this is a 5-minute chart in the bonds, and I just wanted to point out a real simple scenario. Not every signal is a winner. 40% wins. It still makes money, and what's the element? You want to make more money than you lose. So obviously, there's something behind the signals, and many of the signals are based on A, and I'll just share with you, A, they're based on either PPS, they're based on B, HCD, LCDs, they're also based on LCC breakouts. And all of that is information that everyone that has the person's lifetime has access to. So this was just the bonds over the last couple days doing stupid little small 2 lots. This is not, I don't mean stupid, but I mean, I believe that there's, at the very least, you have to do a minimum of 2 contracts when you're trading. The S&Ps over that same time period, interestingly enough, not a great risk as far as win percentage. In fact, it had exactly the same amount of loss as gain, but still netted $1,250 on 2 lots over the last couple days, which, let's face it, we haven't really traded a huge range in the market in the S&Ps. The euro currency, this is one that's not, this is trading, and I just wanted to put it up live right now because it's not something that we would be trading, and it's not 1-2 trade in this particular time frame. But looking at specific trade setups, how it kind of can help you, whether this is Apple, whether this is butterfly wings or Chipotle Mexican Grill, for example, and we'll go over that in a minute. But when you get quality sell signals, right, and one of the first things that I think that we need to address is, what is a quality sell signal? Just because we get maybe the purple bar is a low closed doji, and notice that it closes below the white line in the sand. So that gives me a quality sell signal, and as you can see, the close is clearly below that line in the sand. So it would fire off entering a short position, and then it would cover, and did cover that short position, as you can see. It also fired off then a long position, and this is the kind of nature of what's going on in the real world of trading, that people are using an algorithmic system to fire off trades. I cannot call stuff out in the trading room this quickly. By the time I see it and call it out, generally it's already sometimes happened. So looking at the euro currency, by the way, in crude oil today, here's another kind of an interesting concept with crude oil. Today was the oil inventory report. Now, there was, and I didn't even see a buy signal before the report came out, and it flattened the trade. And then it went short, it took a profit, and then it went short again, it just stayed short, and it took a long and lost a couple ticks, took another trade, lost a couple ticks. But overall, the last conditional change, and as you can see here, that white line in the sand, when we violate the white line in the sand, now it comes to a matter as a discretionary trader. We'll sit there and say, where should my stop go? How do I enter in? Well, a system like this that's designed to base your trade ideas and your criteria, but do it faster than I guess than we're capable of reaching over to the mouse and clicking. So the sell signal's here and the entry's on the open, and you can see short too. Why? Because it generated a PPS sell, but the next bar closed underneath the last conditional change. So the signal wasn't to sell it there. The signal was to sell a breakdown. The stop loss was above the gray bar. So now, as what I'm describing to everybody is what you have access to is some pretty powerful information as far as what is contained within the person's lifetime package with TradeStation. Now, what we did add, and so if you look, there's a new build. There's two things on your radar screen that you should have if you go to the trading app store. Two things that we added. I did a little seminar in Las Vegas in May, and people were asking, well, why don't you have that on your radar screen? It would be helpful. So we put it up there, and it made sense because I was selfishly using it for myself. Basically, what I put up was the actual range of a market and the average true range, which is on your radar screen. We also have the actual volume, and then this is a 10-day volume average. So we can understand, are we going up or down? Is the range expanded and greater than, and this is also a 10-day ATR. So we have a 10-day ATR and a 10-day volume. That's the two new features that were added for all the PUG members. So you have that feature on your radar screen. Now, combined with the fact that we have this person market catcher, which is the relative strength indicator. And again, as a reminder, if you didn't sign up or if you don't have the VIP, let me just explain what the heck it really is. The person's market catcher, guys, ladies and gentlemen, helps to identify the relative strength of an underlying market to the S&P 500. Nothing new. I mean, that's not a big deal. But what I did was qualify the condition of the relative strength in 4 different phases: strengthening, weakening, lagging, and improving. So there's 4 phases of the market using a moving average approach. When we get a buy signal and you start to see a volume appreciation and the relative strength improving, right, we know that we have a higher quality buy setup in the marketplace. So if you look here, you will notice that if it's darker blue, it's still positive relative to the market, but it's starting to weaken. We want to look for a phase where the market goes from weakening to improving, and then that's where we want to start to see that relative strength outperform. And that's where you get a strengthening trend in the market. Now, I did a webinar last week, and I think we even shared some really amazing things that came to fruition. Number one, we did a trade in our own trading room on Apple. We did a ratio back spread where we used the market's money instead of our own, and did the August 145-140 ratio back spread. You sell the 145, you buy 2 of the 140 puts. We got in these things for about 28 cents. It's where you really reduce your cost. It's a delta play. This isn't an options class, but what we were trying to accomplish was that before Friday's little meltdown, we were looking at this scenario with Apple and the volume analysis and the relative strength. If you notice, the relative strength in Apple didn't just go down on Friday. The relative strength went negative. That's a negative number. And how do we know that? It goes negative when there's a white dot or the bar's red. It's real simple. It's not that complicated. But we don't know if, in essence, when the market starts to lose its positivity performance against the benchmark, and when it rallies with lighter volume, it's generally a sign of a weakening condition. And when it does go down, it should see a pretty substantial move. And that's why looking at, everything that's in my DNA called to do that trade. Person's pivots, 145. Market had a volume divergence using the volume indicator in terms of percent change. And, of course, the relative strength was weakening. So Apple was a great example. I went on to further say in last Wednesday's webinar is, we started to examine the same type of condition. And if you remember, and just go back into time, when Warren Buffett announced that he was sold about 30% of his stake in IBM. Well, I tell you right now exactly where Warren Buffett was probably selling. He was selling this day, that day. He was selling all up in here. How do we know? Because the market was going up, and it wasn't going up any further. There was selling, there was distribution, there was supply hitting the market up there. The volume was going negative as the price was rallying, and the relative strength went negative. Now, I don't know what minute, what hour the market's finally going to go down, but down it will go, generally speaking, when you have that type of divergence pattern. And then again, as we all know, Warren Buffett came out and made an announcement for all of mankind and for the benefit of all, and said, oh, by the way, forgot to mention, I did reduce our holdings in IBM about, I don't know, a couple months ago at the highs. So the technical tools that we have actually helped to pick that out. And I'm sorry for the sarcasm. That was uncalled for. But the combination of using the right tools, and that's what we put together. What's really amazing is tonight's focus is how do we kind of put things together on the radar screen and from our scanners. And first and foremost, if we start to look at breakdowns of these last conditional changes, and you start to see, well, we've got a low close doji. And if you look at the gray bar, the market never stopped out or traded above that gray bar, that last conditional change. But one thing it did do is it kept closing and breaking down, making newer lows and holding its last conditional gray lines. So when you get a market that goes down, the gray line will act as a resistance so that if you get a spike back up, you can lean and sell against it under bearish market conditions. And that's how we trade this. Now, this week, by the way, my most hated fast food store on the planet, not because I don't like Mexican food, I just don't like beans and rice in a burrito. It's just not cool. If you want great Mexican food, you go to Chicago, you go down to 26th Street in Independence, and you go to Little Mexico. You go to either Jimenez, you go to La Chiquita. There's a ton of Mexican places down there that you can order authentic burritos, and they don't put black beans and rice in. They put maybe frijoles, which is not black beans and rice. But anyway, all right, enough of that small little rant. What we did uncover was with Chipotle Mexican Grill, as the market has been rallying, the relative strength did the same thing. It started to weaken significantly, and the volume went negative. Now let me zone in on the volume here real quick. All right, so clearly you can see a low close doji, a last conditional change right there. And all you have to do when you scan for your low close doji and your last conditional change, then identify, and this is tonight's topic, how do I identify on the scanner that the relative strength for the equity market is weakened and it's going negative? So watch carefully. On the chart, the moving average is red and the bars are blue. So that's the moving average and that's the relative strength reading. Now, when the market is going positive, the bars will be bright blue and the moving average will be green. So that's a dead giveaway. How do we see that? Right here. The relative strength is bright blue and the moving average is green. So what you want to do, folks, for those that have this product, just right click, number one, and then just copy the window, go over to File, go create a new workspace, and then, well, I didn't do it, but let me try it again. I'm just going to copy the window. I have an untitled workspace, and I'm just going to hit Paste Window. All right, I got the same radar screen, right? So at that point in time, here's why I did that. Because this is a pre-programmed page that has all the different stocks and sectors within the markets that we trade. We start off with the sectors up here, and then the sector ETFs and the stocks categorized underneath, all right? So now I just cheated and this is mine right here. So what I normally do is I will have a 60-minute chart for stocks, I'll have a daily chart, and a weekly chart. Now, we go over to our scanner, and so if we ran a scan, so I'm going to go, nothing came up in buy signal number 5. Let's go with scan number 1. What is scan number 1? Scan number 1 is when we have a daily PPS buy signal when the weekly is in a buy mode. That means the higher degree time frame is trended up, and the short term may have had a downturn and is now popping back up going with the dominant trend. All right? So all I want to do at that point in time is go down and say, what are all the stocks? And there seems to be some financials, and this is as of today's close. You can see 6:14, 5:05 p.m. So I'm just going to highlight the column of symbols, right? Now, if it doesn't have a sector, that means those are preferred stocks. So we're just going to take a look at the common shares. And now I'm going to go to my scan results page, right? Scan results. I'm going to get rid of yesterday's stuff, delete, right click, and then hit paste. And then hopefully this happens quicker than this. Typically, we'll get, the market will fill in pretty quickly, except for when I'm doing a presentation, of course. What we're going to have happen is you're going to get a listing of all the, of course, the daily buy signals, but you'll be able to now load up on your radar screen the stocks that, or sectors that may be generated a daily buy signal. Are they in a weekly buy? Is the pivot in a weekly buy? And is the relative strength blue? And is the moving average strength, moving average green? And that'll help to say, and I can now collate that. If I just go and hit the strength, I can find out, well, I'm not sure who this guy is, but it's getting better, but it's still not positive. And if I scroll on down, I can start looking at specific stocks that may look a little bit more appealing. So this is Hershey's. So Hershey's, as you can clearly see, is in a weekly buy. It did generate a daily buy, and the relative strength has improved. I can make a better quality, sound financial decision. Which stock do I want to buy in that condition? So the person's pivots can help to quantify, not just in this indicator package, it can help quantify the person's pivot systems, what the condition of the market's in, but I can run scans, and now I can kind of get a better gauge of, are they outperforming the market? Is the stock looking better relative to the S&P 500? So that's DTE Energy, and I just clicked on it. If you notice, because it is all color coordinated, in other words, its symbiology is all color coordinated, whatever stock I click on, it's going to show up in my charts down below, so I can take a visual gauge of that market. And then now I can say, well, gee, if tomorrow, if the market maybe comes in and fills a gap, it has support here, look at the white line in the sand. It's right there in my charts. So maybe if DTE pulls back, I could look to be a buyer and place my stop underneath that last conditional change. That's the last conditional change. So I can start to set up the trades that I want to take for the next day, or find out what stocks are a little bit better than others. All right? So again, if you're not doing that, please take advantage, because it is a powerful way of quantifying your trades in accordance to not just the person's pivots. And again, many of you are all familiar with the fact that we have the quarterly pivots here. It tells us where the market, what the support and resistance are, the pivot, support and resistance on a quarterly basis. It tells us what the quarterly pivot outlook has been. It gives us what the monthly pivot resistance, and because monthly is more frequent than quarterly, we put down what the percent change difference is between where the current price is and where it is to its support. So I can also take a look and say, gee, is it in a monthly buy? Is it in a weekly buy? Whatever information I want, I have now on this radar. Now, more importantly, what's now recent, I can now say, gee, did we have an expansive range today greater than the average true range over the last 10 days? And was it on heavier volume? So we're just taking a look at USO because it's the first one on the list. And quite frankly, we had a heavier volume, more than 2 times, almost twice, it's not quite twice, excuse me, but it's almost 2 times the volume level that USO has been in the last 2 days. And look at the range, 39 cents versus its 10-day ATR of 28 cents. So we had a heavier volume day and an expansive range. Doesn't quite tell me it's turned around. Where did the market close? 923. What's the low of the day? 920. So it had a big range down day on huge volume, bigger, and huge, instead of my opinion, I now have a testifiable fact. Huge meaning it took out its 10-day volume average. That's a huge volume day, right? So now I can kind of define better conditions of the marketplace. Did we go up today in XLF on decent volume? I'd say so. The average 10-day volume in XLF is 86 million. Today we did 117. And the ATR is 29 cents, and we went 41 cents. So it did the opposite. XLF closed at 24.40. You can see the high was 24.54. So right now, looking at a radar screen, I know the XLF closed closer to its high than it did its low. I know it exceeded its average 10-day volume, and it's still outperforming the market relative in terms of its strength and its moving average. So XLF looks to be like it has a little bit strength and momentum going for it still. And that's what you can get out of running your scans that we've created on TradeStation. They're not just, give me a PPS buy and give me a PPS sell. We have several different scans for different reasons. But you can take those scan results now, whether they're high closed dojis, low closed dojis, and say emphatically how strong or how weak are those as it relates to those defined qualities of rates of measurement. And the quality of rate of measurement is the relative strength and volume. Okay? Now, earlier I had mentioned about what's going on with maybe options, and we've been seeing this whole, I wouldn't say the whole year, but we've been seeing this year. I did a presentation in Las Vegas, and a lot of folks were quite a little bit taken to Las Vegas, and a lot of folks were quite a little bit taken back at the information. And what the information was, purely speaking, was the fact that a lot of people have been hearing talk about the volatility index and a lot of volatility hedges, and no one really knows what they're talking about. This is a product called VXX. It's the ETN on the VIX, right? The volatility index, which is based off the S&P 500. Now, the webinar I did last week described this VIX product, which is, quite frankly, if you think about it for a second, we have stocks, individual stocks in the S&P 500. You have the S&P 500 index. IN stands for the index. So you have the stocks that are in the S&P 500 index. And then you have the options on the S&P, that's OPTIONS. That's options, by the way. Sorry, it's bad writing. And then you have options, okay, on the S&P 500. And that's where you get the VIX, right? And then the VIX is a reading on calls and puts on the S&P 500 options. Then you get, besides the VIX, now you get the VIX futures, and then you get the VXX. So quite frankly, we have a derivative of a derivative of a derivative of a derivative of a derivative based on stocks. And that's what the VXX is. That's pretty bizarre stuff, how diluted that comes down to, right? If you really think about it. Now, look at the volume on the VXX. The volume on VXX today, and I don't want to cheat, I want to make sure I got the right one, 83 million. 83 million on the VXX. The range today was 31 cents. The 10-day average range is 42 cents. So it wasn't a really big expressed range day, but we absolutely had some pretty decent volume, greater than its 10-day average. Now, what about the spiders? All I have to do, instead of having to search for it, is double-click on the symbol link and then just go alphabetically. So I want to compare the VXX to the spiders. 79 million. I'm sorry. The VXX did what again? And if you think about that, we'll go down to VXX, and we did 83. So the spiders did 79, and the VIX did 83. You had 83 million. You had more trades going on in individual ETFs like the XLF and in the VXX, which is a hedge product, right? The VXX is a hedge product. And that is why we have a, and just to give you kind of an idea, this is a, based on a lot of the stuff that I've been teaching and that is contained within the person's lifetime package. This is a VXX trade system. And I'm going to, just to share with you some of the incredible work here. If you're just looking at how we can massage, not massage numbers, but create trading systems on products. This is since inception of the product. This is since June of 2009. If any of you are TradeStation aficionados, you would notice that's a pretty darn good smooth equity curve. Performance summary, here's the best part. For new traders that think they have to have a lot of wins, it's 55% win on short trades. Now here's an interesting concept. The profit factor is 2.63. That's not bad. That's pretty good. Now, here's the other aspect. It's done 624 trades, mostly short. Look at the longs, only 18. So if that would say, well, John, that looks rigged. And the answer is, you are correct. It is rigged. It's rigged in the sense that this is a product that generally goes down due to its contango. And that's another topic that we're going to have to discuss that another time. The purpose of tonight is to share with everyone what we've created is a system, an indicator package that can allow you to make incredibly sound decisions no matter what the market gives us, whether it's volatility, corn futures, feeder cattle, butterfly wings, Apple, Chipotle Mexican Grill, or day trading futures. That's the key. So it's a matter of, are you disciplined to use it? Do you understand how to use it? And that's why we get together once a month to put together with my time for ongoing trading of what we're doing and how we're utilizing the product. So with that said, I think that this is a pretty decent outlook as far as indicators, and just to let you know, the volatility, again, everyone thinks every trade's a winner. Not every trade's a winner. So if you have bigger winners than losses, just do remind yourself that you're going to have a loser. It's a matter of, did you get out of the loser when you should have, right? That's the key, and then you move on. It's like playing golf. You have a bad golf shot, move on, next shot. It's the next shot. It's except for if you're in Tiger's condition, that's a different story. But overall performance, this is pretty amazing stuff. Every year it has provided a decent rate of return, so to speak, and it is not yet something that we are looking at for the release to the general public. But I just wanted everyone to understand that you have in your hands the ability of literally what I think is beyond institutional grade and analytics tools and ways to set up trades for yourself. You know, it's a matter of taking advantage of these lines in the sand, as I call them, the last conditional change, understanding that PPS, and then combining the difference between, and in this case, I've got just this is a spider 60-minute chart. If you are at pivot support and you have a buy signal, right, are you taking advantage of that buy signal? Instead of saying, gee, I think I'm going to go sell short because it can't go higher. Well, if you feel the market can't go any higher and you want to sell short, then do me a favor. Wait for a sell signal and a breakdown below the last conditional change. And then if you get short, then that's one thing because you're getting short. And you go, well, I didn't get anything out of the trade. It didn't go anywhere. Well, it actually did go somewhere. Did you take a profit? Right? So that's the key. After so many periods of time and you're at a support. Now think about that. If you have a tool, and how many people think this market's going to go down? Everybody who's a trader is trying to pick this top in the market. And quite frankly, while we do have some sell signals that are generated and they break down, the market goes down. But one thing it doesn't do, it's not been conforming to follow through. So the last conditional change and the PPS and these pivots have been instrumental. One other thing that's been phenomenal is this page here that's available to everyone that has the person's lifetime. And that's the gauge of what is the overall market doing in the each respected sectors. So when you look at the NASDAQ 100, we actually, a lot of people are thinking they should be buying the break. And if you noticed, I'm not jumping up and down. I said we did a ratio back spread in Apple. We did today, finally got filled on a calendar spread in Apple. The one, well, it's a different story, another time. But one of the things that I think we are going to see is not maybe a complete debacle in the Qs, but a period of consolidation. The breadth started to weaken, and the market did come down on some decent volume. The volume indicator in the S&P 500 is not indicating, you know, that it's got tremendous strength. The breadth of the market, the advanced decline, it's still moving up, but it's vulnerable for a pullback. So I'm a little concerned in the market right now. The other day I tweeted something that I felt was kind of important in the sense that I was looking for a last conditional change close. If you go look at my Twitter account, I actually tweeted this out. So let's take a look at what I was talking about together. and you will see, if I can bring this into speed for you, or into, I'll bring this right into focus. And then you'll go, oh man, yeah, I get it. The last conditional change. You know, we were toying with the market, this right here, okay? So on Friday, the market right before the close was below 243.08, and in the final minutes, it ran up. Then on Monday, it was below that line in the sand right into the close. You think I'm joking? Let's bring up a short-term chart. So I'm not saying that the market is self-thinking, but I'm thinking that the market avoided a breakdown below that 240.03 time frame right into when the market was closing. That 243, it was right below that level before the close, and it popped. It was below that level before the close, and it popped. There's the close, and there's the close, and they were below that 243.08 for the majority of the day, and they popped right on the close. So the market actually paid you for information. That is an algorithmic level. A daily close underneath 243, you will more than likely see follow-through selling pressure in the market. So that's why I tweeted that out without giving, I don't think I need to give an explanation, but that is kind of what's really going on in this environment. We've got really unique conditions where we are seeing this type of analysis really take hold in our day-to-day trading. So to me, it's tapped into the whatever the mindset of algorithmic trading is controlling the world. It's tapped into that. So it is kind of vital, and it is important, and it is defining and helping us stay on the right side of the market. So in normal conditions, there's a lot of system traders out there that aren't doing that great. And a lot of system traders are the guys that have correlated markets. And what I mean by that is, so you have well, here, let's go over it and look again. So we have you have the E-mini S&Ps, you got bonds. Usually stocks go up and bonds go down, and that's not happening. And then you got the dollar. Interest rates go up, and when interest rates go up, the dollar goes up and the euro goes down, and that's not happening. And then you get gold, and you know, gold and bonds are extremely correlated right now. Not tick for tick, but they've been correlated since late last October, before even the election. And then there's crude oil. When crude oil goes down, I don't know what crude oil is supposed to do. Crude oil goes down, it shows what? The economy's weakening, there's no demand. Crude oil goes up. I mean, there's a different story for different year, whatever people want to kind of tap into. So if you were a correlated fund that you were thinking that crude oil goes up and the dollar goes up and gold goes down and blah, 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 you're getting crushed this year because these correlations are not working well. And I think what is working is on an individual basis, we are seeing markets, not every trade's a winner, don't get me wrong, but over the period of the day or the period of the week or the period of the month, the small moves that we've been getting, and let me just share with you what I mean. When you take a look at the E-mini S&Ps, and you have an average true range of 13 handles in the S&P 500, all right, futures. That's a 13 handle move in the S&P 500 on a Fed day. And I mean, it's like the most bizarre contraction of ranges that we've seen when the markets have broken out to newer highs. So we definitely have seen a contraction in volatility, not just reflected of the VXX, but in defining trade ranges. By the way, back in May, many of you might not remember this, maybe you do, but we had about a 22-point handle on an average range basis for the E-mini S&Ps. We had a better range in May. So looking at either the S&Ps or if you take a look at bonds, I mean, we were having a 1.5, almost 2-point handle move in bonds, and now we have less than 30 seconds. So there's been an enormous contraction in volatility in the markets. And what we see is nothing happens, nothing happens, nothing happens, and then one day something happens. One day something happens, and then nothing happens, and then, of course, today was Fed Day. So if you average those ranges out, it's not like it used to be. We used to have bigger ranges, more volatility. So I think what's happened is traders haven't adjusted for that contraction in volatility. And so therefore, when you get a profit, they're thinking, hey, I used to get a full point of profit in the market. So they get a sell signal. By the time you get a sell signal, you know, you've got maybe 22 ticks. That leaves you on an ATR of 31, right? I mean, you literally got 9 ticks left into the trade, 8, and you need 1 to go through you to do you. So you literally got only an 8-tick potential profit by the time you got a sell signal. So the point being is when we see a contraction of the ATR, what do we have to do for setting our targets for profit? We have to reduce our expectations. And that's the environment we're in right now. That's why one of the strongest tools that I've used in this, in fact, the ATR is nothing new to me. In fact, this particular tool on that same book called Candlestick and Pivot Points that was written back in 2005, I think it was published in 06, the one with my picture on it. I think it's on page 264. It combined talking about setting profits, the last conditional change, and using the ATR. So this is something that's like literally a system or methodology that I've been using for a few decades. So it's not new. It's just something that's been impressed upon being able to use more now than ever. And so I wanted everyone to know that when you have the person's lifetime package with TradeStation, you've got an enormous set of tools that aren't the regular traditional, and with TradeStation you can always add the traditional tools, but we have tools that are designed on institutional level to really tell us what we need to know in this environment. What's the stock's relative strength to the overall market? What is the changes in volume? Not because I want to cheat and not use on-balance volume anymore, but on-balance volume hasn't been as efficient, and I'm not sure if it's because of the fact that maybe there's a more of a push to use ETFs than individual stocks, and I haven't figured that all out yet. But you know, options certainly has the dynamics of the movement in options has changed as well, and of course the volatility levels have changed, and the products that we trade in volatility is enormous now. So with that said, I have created a set of dynamic indicators that make sense, that are easy to use, that seem to be tapped into what's happening in this quant and algo trading world. They're working for day trading, they're working for swing traders, they're certainly working for position traders, and as well as being able, if you have option background, to use options on your trade ideas. So if you're bearish on any market that comes off the pike on the radar screen, and you get a weekly identification. PUG members, we added the weekly high close doji to give you fair warning before the market closes. By the way, if the market is going to close here into the close, you may want to look at maybe a bearish position for GLD. And GLD did generate a low close doji. The stops would go above 122.08. In fact, the high at person's monthly pivot generated, that's monthly pivot, generated a low close doji the other day, and your stop would go above that gray line. So the whole system, without having it spelt out for you, that's a sell signal. It's purple. It's a low close doji, and you can make a determination whether you wanted to put a trade on in that position or not. This is the last conditional change. The market certainly closed below the last conditional change. This is another one. We're near pivot. Man, we break that next pivot level, and the next stop for gold is more than likely, or at least GLD, 117.05. So the volume action, by the way, did go negative, and so did the relative strength. And how do we know? Because the moving average turned red, and it lost its positive momentum. It's a bad straight line. So all of this is available to you. You just maybe need to understand why did we add the ATR, because it was something I've been using and I had it on a different page and it made sense to finally get around to adding that to the radar screen. Okay, so there it is. Now, John says the screen is not changing. I'm not sure. It looks like we had a change of screen. George says only for $12. I'm not sure I understand what that was about. But it looks like the screens and everyone had that page there in as far as can see that changing. So as far as putting together and putting different setups, signals, however you trade, whether you trade 5-minute, 15-minute, whether you trade gold, whether you trade crude oil, whether you trade at 3 in the morning. Moral of the story, this is currently right now a, think of it this way, this is almost the same pattern as the E-mini S&P today, right? I mean, damn close to the same setup. And I'll just share that with you right now. The market drops. It goes down. It's a breakdown. The market was short, and it was short, and all of a sudden, here's a gray line in the sand, and what happened? It closes over the gray line in the sand, and it enters and fires off a long. So that short is covered. It goes net long, and then where does the stop go? You trail your stop to below when long the last conditional change. That's kind of putting, a little system together with, now this system is a personal system that is designed to take specific profit targets. And so when it hits its max profit target, it flattens the trade. Sometimes we get out right when we should, and sometimes we leave a little bit of money on the table. But overall, the system is doing quite well day in and day out. And as you can see, not every trade's a winner, but it does its performance. What is important is how tonight I wanted to put together not just the relative strength for stock traders, but to emphasize the last conditional change and its importance in not just defining where to place a stop loss, but also how it defines a buy and qualifies a buy or qualifies a sell signal a little bit better. So instead of taking a sell signal just for the hell of it, why not take a sell signal when it breaks a longer term support? So that's a white line in the sand, and it didn't take that sell signal, right? So it would have avoided a potential bad. Now it did take a long, of course, trading at 1900 hours, 7 p.m. probably not your best time in the evening, but it is a good time in the market to trade in the Asian session, which starts just not that long ago. But anyway, I just wanted to go through one more time how to set up, take your scan results, put them on your scan results page, fill in the blank, and then make sure that you can see that relative strength to find out, are you getting into a sector that is outperforming the market? And then more or less you can actually even design your scans to say, give me a buy signal and predetermine your sector that you want to get into. And that's another PUG class that we've had before. So anyway, our time's concluded. I wanted to get back to all the guys that have the person's lifetime indicator with TradeStation. What we wanted to cover tonight was, number one, the new addition between the ATR and the volume. I think those are nice little additions to find out, is this a strong participation? Then to be able to run your scans, take those symbols, put them into a new workspace, and see, are they qualified, are they improving, or are you taking a buy signal? I mean, the last thing we want to do is take, like, for example, in the energy complex. So a stock that I was in, I quickly got out, thank God, was Concho Resources. Now, back over here, Concho was starting to look pretty good. and it was improving. The only problem is the volume was starting to weaken. And that's when I was, you know, if the volume doesn't improve, we're going to have problems. And we got out of the trade, took a small loss. Since then, I did not get into Concho. Why did I not take that buy signal? Because a one-day pop does not make a very strong buy signal, number one. And number two, the relative strength was still negative on a daily basis. So, you know, what happened today? Energies went down. We avoided a landmine, so to speak. So the relative strength will help qualify the buy signal, and that's what tonight's focus is really about, is to say, how do I get more use out of the tools that we've created? Are they useful in this environment? And the answer is absolutely. So as I said earlier, in a quantitative environment, in an algorithmic controlled world, and we are seeing more and more algorithm trading, automated trading. It is just mind-boggling, but I want everyone to know that you sort of have an equal playing field to a degree, and that equal playing field is this. Let's not forget the very basics of what a quant or an algo trader is going to program. They can look at pairs trading. They can compare all kinds of. They can look at pairs trading. They can compare all kinds of wild correlations and beta and get all kinds of mathematical equations, but it all comes down to a few simple concepts. We all have to deal, and all of that information is based off the open, the high, the low, the close, over time, and volume. That's it, baby. There's not much else to really, now that's a lot to cover, so don't get me wrong, and there's different products that measure all that stuff, right? But at the end of the day, that's the true essence of what we are using rates of measurement. We are comparing one product's close to another product's close, and that would be the person's market catcher. We are looking at volume, but instead of absolute volume, we're taking net percent changes in volume to help uncover divergent patterns. So that's a little bit smarter and more efficient rate of measurement in the marketplace, right? So with that said, this product literally has everything in your hand, not information overload, filtering out what you need best to make better decisions. And we have the ability to auto trade using this product. So with that said, thank you all for being here. And if anyone did have a question and wanted more information on this that is not a PUG member, certainly feel free to email me at jperson, and I'll type it in the room. It's jperson at persons, PLANET.com. Persons Planet, jperson. Boy, I didn't spell my name correctly. Let me try that one more time. jperson at persons, PLANET.com. There it is. jperson at personsplanet.com. So I'm glad everyone had a chance to visit with us tonight and spend some time. That does conclude our session, and I hope it gave you insight as to, hey, does this stuff really work? And when you look at something like this and you look at those incredible results last month, this month, last year, this year, and you look at this kind of stuff on a product, you know, and then you go and you turn it from a volatility product to, you know, day trading in the market and looking at, for example, here's something that's really stupid, right, kids? Different page, different system, high close doji. Ever heard of that? With the defined profit target, the market traded right. Just think of the algorithmic design here. It had to get out of this trade at a specific level, and the market had to trade through the price in order to get done. So whatever we've created is insane. It's sick. I'm here to tell you, this, I don't know in this world how people, I guess people can trade, but what we've created, and this is something that has the profit target set, the risk target set. That's what that stuff meant. The red dots were the loss and the green dots were the profit. so that you can take an idea and maybe cheat and say, gee, if I don't want to be in the trade, maybe I should get out of it a little early. But there's the white lines in the sand, and under no circumstances, the market traded through the white line, didn't close below the white line, and still set the profit target in accordance to the setup. So, I mean, it is pretty fantastic information and trading system and methodology. So, again, thank you all very much. And for those that are coming to our mentoring, that class sold out like that. And that's exciting because this is, and I don't want to say this on a recording, but it's almost like an ATM of what's happening. Will it continue forever? I don't know. I mean, it's working now, and it seems to adjust with the market conditions. And I always tell the folks in the trading room this, boy, when we can get finally in a time period where we get the S&Ps moving, the profit targets will be expanded. And so at this point in time, we still have that contraction in volatility with tight ranges. You know, we got to just take what the market's giving us. You can't force trades, and you can't ask the market to give more than the market's willing to give. And if you understand that, you're going to succeed in the long term. If you've traded before, if you're an export trader, and we got all kinds of people, current fund managers, we have current registered investment advisors, you know everything I said is a fact. You can't ask the market to give more than the market's willing to give at this point in time. With that said, I hope what we've created has been helpful for you. If you think that this is something that you would like to learn more about, give me an email. Thank you all very much. And for my PUG members, I hope you have found value and assistance in this product. Take care, everyone. And for those of our trading room, I'll see you in the morning. Ciao.